Is the bottom finally in? That's what we're going to be talking about today. That's what the talk of the town has been. There's a lot of data and metrics pointing to the fact that the bottom might be in. You can never guarantee it. But it's been a lot of things happening this week that we have to go over. There's no Chris today. He just had his first grandbaby, so it's just me giving you guys all of the updates and all of the alpha. So per usual, we're going to go ahead and get started. This is from the research investment firm Brownstone. And they're saying that Bitcoin sellers are exhausted and recent price action might be proof that a bear market bottom is in. So this is showing a bullish divergence, and it's a signal that sellers are getting exhausted, meaning they're selling, but buyers are keeping the floor intact. And everything that's happening with the war and just everything that's happening in the macro, which is not good, it's a pretty good sign that Bitcoin's still holding around the 60K level. And you can look at this chart and you can just see the divergence. Another thing, guys, and I think this is a really good sign. MicroStrategy sold, they've been selling Bitcoin from between July 1st and 5th. They actually sold 213 million Bitcoin. All right. Now, I feel like if this would have happened a few months or years ago, like it would have caused the market to go to a panic. It would have caused Bitcoin to drop because MicroStrategy is the largest Bitcoin holder. Right. But if you look back in history, before MicroStrategy, it was Grayscale. Before Grayscale, it was China. Before China, it was, the cypherpunk. So I don't think Bitcoin, if it's going to survive as an asset, it can't be something where it can only survive if it has like a poster boy or like a mascot. You don't see that with any other assets. No stocks. Like if one person sells, it's just like you buy something to take profits. You don't buy it to hold it forever. So I think that is good. The fact that MicroStrategy is taking profit and the market isn't going into a super panic because of it. Another thing to look out for, they're having their Q2 earnings call on Thursday, July 30th. And this is going to be good to see. This is a strategy. They have their stretch fund and a lot of it's been kind of going underwater. And this is a big reason why they have to sell, because the price of that stock went down. And now they're having to sell assets so they can basically make the investors whole. They have to pay out these dividends and things like that. Probably regret starting a stretch fund, but either way, it's good that he was able to sell some Bitcoin and the market didn't react crazily because of it. All right, guys, per usual, we're going to be looking at the fear and greed index. Last week, we were at a 26, so we're up 3%, 4% actually, but we're still very much in fear territory, right? We're not too far from the red, and it's a good time to be buying as well as farming, right? And if we look at the ETF inflows, we had a nice day of 250 million plus in Bitcoin ETF inflows and 20 million, which is a drop in the bucket for Ethereum inflows. Then we had a day of 21 million and 26 million. We had a positive ETH day and a negative Bitcoin day, and right now we're back to negative. But it's better than just all straight negatives like we've been having for the previous month. So, and again, remember on our episode last week, we talked about how it was the largest 30 days of oil accumulation since 2013. And like we were saying last week, no one can time the bottom, but you can kind of guess a bottom range. And whales, they like to buy at discounts. And if they're deploying that much capital at this time, it's going to require the Bitcoin floor to raise. But you also have to keep in mind that the price of Bitcoin isn't only determined by supply and demand, it's determined by buy and sell orders on exchanges. You still have a lot of things happening off books. So I'm hoping that the bottom is in. But if not, we'll keep farming and we'll be able to just keep buying in discounts. This is a matter of when, not if. And the longer it's delayed, the more time it gives us and you to accumulate at really good prices. All right, now if we go here and just kind of look from the top down, we got the central bank balance sheet starting to taper off. A lot of people are thinking we're going to get rate hikes because of how the jobs came in. We talked about that a week or two ago. We have the M2 money supply still going up. There's no reason why inflation's coming in hot. We got gold. We just finally got across here. So gold's officially in a downtrend. And honestly, I think this is a good time because gold usually pumps when there's inflation fears because people buy it to basically protect the purchasing power that they're losing in their fiat currencies. And then if we look at oil, we had a recent spike up as the conflicts in Iran has kind of started to peak up a little bit. I want to show you guys something interesting here. So this is the United States Strategic Petroleum Reserve or oil reserves, right? And we are right here. Like we're getting close to the level of being able to the minimum operating level, which means we're going to have to start buying oil spot. And a lot of people think Iran is looking at this and waiting for us to get to this minimum operating level so they can use it as negotiating power and leverage. Now, if I'm thinking about Donald Trump, I wouldn't be surprised if he threatens them like, oh, with some kind of militant threat. I'm not going to say it on here because we don't want to get shadow banned, but that may not work in their favor, or they may not even be thinking about that. But if I'm them and I see this, and we know the U.S. needs oil, and they know that they have it, and they have the Strait of Hormuz still, you know, with caution tape around it, you know, it's definitely something to think about. Moving back on, and we got the S&P 500 consolidating near all-time high levels. It's no surprise, as you know, we're still printing money, and it's going to find its way in the asset markets. The Dow Jones around all-time high levels. We got the NASDAQ around all-time high levels. We got Apple at all-time high levels, right? People are buying those Mac Minis, the iPhones. If we look at Bitcoin, same thing. We've kind of been consolidating between the 60 and the 65K range. Same thing as last week. I don't think we're out of the woods until we break and retest our 62, our 200, and our trend line, as well as the 75K level. We break and retest and we get a nice red candle close here. That'll be a really good time because that means we'll have 4 confirmations: our 62, our 200, this trend line that has been in since pretty much August of 2025. You know, that means it can come all the way back up to 75 and test it as resistance and come back down to 50. That is still very much a very likely case scenario. Like, we are not out of the woods yet. The trend's your friend, and that goes on the way up and on the way down. Same thing for ETH. The 62 has been acting as resistance as well as the 200. So until we get above that, until we get above the $2,000 level, that'll give us another 4 confirmations. Actually, we need to get above the $2,200 level. We need to get above our 200, right? Whenever ETH is bullish, it is above the 200, and the 62 is above the 200. So we need to have our 62 cross the 200. We need to see the price of ETH get above the 200, the 62, and this trend line. And this trend line is very significant because if we zoom out, it's been respecting this trend line since 2022, right? The farther you go back, the more legitimate it gives it as far as the technical analysis goes. Now, we really need to get back up on this trend, but you know, we have a while to go. That's going to be around 3K, and you know, will it happen this year? Maybe, maybe not. We already talked about Solana last week. You know, I wouldn't be surprised if the bottom is in for Solana. We broke out of this long-term trend that we've been in since October 2025 ish. And we broke out, we retested our 62, and we've been holding that support. We still need to get over our 200, but it's a good sign to see that things are starting to go up. But I want to talk about a very huge update that just happened, right, from the Base Network. We talked about Robinhood last week. I want to show you guys a quick stat. All right, so we've seen the Robinhood chain daily DEX volume hit a record high above 560 million, right? This is DEX trading volume, and mostly Uniswap, because Uniswap's integrated with the Robinhood chain. Now, the most important thing with Robinhood is, like, yeah, you're gonna see retail investors swapping. Like, they had a meme coin called Cash Cat, and the name Cash Cat is relevant because it was what Robinhood's name was before they changed it to Robinhood. I don't know if they changed it to Robinhood or if it was just that was the name they were gonna go with. But my buddy Base Junkie, who we do the Owl Live on Base DeFi show, he called it out at like 5 million. I'm like, oh, you know, whatever. That thing went up to 140 million. He sold it early too, but the CEO of Robinhood followed the account, and they've been supporting meme coins. I think he tweeted and said, yeah, we want real building to happen on Robinhood chain, but it's good for meme coins too. And that just caused the price to pump a lot. But I want to talk about something very, very significant here. Okay, so like we talked about, Robinhood launched his Robinhood chain, and for the first time, Base Network has legitimate competition for another company with millions of retail users, right? This isn't David versus Goliath. This is Goliath versus Goliath. Coinbase has a lot of crypto users. Robinhood has lots of investors, TradFi investors, some crypto investors too, right? And there are some people who use Coinbase that also invest in stock. So they both have a mixture of both. But Coinbase is trying to bring basically crypto to TradFi, and Robinhood is trying to bring TradFi to crypto, right? They're both trying to integrate it, but they're coming at it from 2 different directions. And it's just like, while Robinhood just launched their chain, Coinbase just quietly shipped one of the biggest infrastructure upgrades in history, called their B20 token standard, which is Barrel. I don't know where they get these old grandma names from, but I think it can fundamentally change how tokenized assets are issued on chain. Okay, so this girl upgrade is it's a native token standard built directly into the base protocol, rather than relying solely on traditional smart contracts. And that's very, very important because the Solidity programming language treats everything as a smart contract. And that's why there's so many hacks that happen, even though these projects are getting multiple audits. Like you think of a project like Aave that's been getting audited for years and millions of dollars, and they still get hacked. That's because anytime a smart contract interacts with another smart contract, it presents a vulnerability. Okay, so the fact that the B20 token standard isn't relying solely on smart contracts, it makes it more powerful. And that's why I really was bullish on the Radix chain, because they had their asset-oriented smart contract programming language that they invented called Scripto, where you can put assets in buckets and they didn't treat everything as a smart contract. And it made the code more efficient. So whereas I remember they showed on the white paper how many lines of code it took to build Uniswap on Solidity versus how much it took to build it on Radix, and it was like 75% less code. So I'm hoping that the B20 token standard will be able to do that as well, because it'll attract not just more institutions, but more developers, which will attract the institutions because they got to have someone to build. Okay, so it also reduces the standard withdrawal time from Base to Ethereum, and it just overall improves performance. And I think the most important thing is that it positions Base as a first-class chain for issuing stablecoins, RWAs, and other regulated assets. So just to like break this down and explain it simply, right now we have the ERC token standard, which stands for Ethereum request for comment, if you care. So basically how it works now is you deploy a smart contract, right? You get an audit, and then you pay gas fees, and then you maintain that contract forever. B20 kind of flips this upside down. So instead of every token existing as its own smart contract, the token logic is built directly into Base's node software as a protocol level precompile, while still remaining compatible with existing ERC20 wallets. Meaning that all the ERC20 smart contracts and programming and things that exist in DeFi right now, it'll still be able to interact with that. So that way they don't have to update to be able to use this. All right, it's going to still be able to interact with the wallets, the exchanges, the block explorers, and the DeFi apps. So you can think about it like this. ERC20 is like apps running on an operating system, okay? Whereas B20 is features built directly into Windows or iOS. Much faster, much cheaper, and most importantly, more secure. So now, why does this matter? It's going to offer a lower cost, faster execution, native support, less code like we talked about, fewer exploits, less auditing, and overall better compliance. So it's like a win-win-win-win-win-win-win. And now, we're always talking about institutional adoptions. Why would institutions care about this? Well, this is the big point. B20 includes features institutions actually need, right? We looked at RWA.xyz and we showed how the adoption of RWAs is gradually increasing regardless of what's happening with price actions, Bitcoin and Ethereum. So B20 is going to allow features such as mint controls, burn controls, pausing, supply caps, transfer restrictions, compliance tooling, asset freezing for regulated issuers, and stablecoin specific issuance options. So those features are built into the standard itself, right? It's not something you got to plug in an API or something like that. And it makes it much easier for regulated institutions to issue tokenized assets, which is going to aid in the adoption of RWAs coming on chain, specifically on Base. So if you think about firms like BlackRock and Frank Templeton and Ondo and tokenized stocks and stablecoin, this is the next trillion. That's what's going to represent the next trillions of dollars coming on chain. And if Base wants to become the home for tokenized assets, which they are leading the charge in, it can't just have cheap transactions. It needs to have the best issuance infrastructure. And that's exactly what B20 is attempting to become. So they also talked about their future roadmap. So a couple updates that they listed is pan gas and the B20 assets, native account abstractions, better issuance tools, and then just overall more protocol level functionality through their upcoming Cobalt upgrade. I still have to dive into that. So overall, I think the biggest takeaway from this week isn't that Robinhood launched a chain. I think is that two of the largest financial companies in crypto are now racing towards the exact same future. Robinhood's attacking distribution, Base is attacking infrastructure. Robinhood wants millions of investors, Base wants millions of builders. And if tokenized assets become one of the biggest narratives over the next decade, both ecosystems can end up capturing enormous value from different parts of the stack. And I don't think it has to be one winner, right? There is going to be someone in first place, but I think it's an area where they can both win because, you know, this is trillions of dollars that we're talking about here, not hundreds of millions or even billions. Other than that, the yields in DeFi are really, really good. You know, we just showed you guys how Solana is consolidating. You know, you can get 646% right now on Radium, right? If we look at some of the ETH USDC pools, they're looking really good as well, you know, over 200%. And that's really good at current ETH prices, right? You know, we have a while to go before we get back to 3,000. We look at some BTC yields, right? 128% on Bitcoin, right? So yeah, that's all I got for you guys today. You know, if you guys want to take advantage and stay on the leading edge of getting access and understanding everything that's happening in crypto, like it's the news that we just covered today happened in a matter of 1 week. And that's enough stuff for a month. Like the innovation has happened at such a fast pace, and there's so many ways to take advantage. If you're looking for a strong community who specializes in this, who can show you how to take advantage of the best opportunities in DeFi, like you just saw on the screen. Like I said, our students are averaging between 0.5 to 1% daily in passive income while they're raising their kids, working, you know, having fun, enjoying their summer. If that sounds like something that you'd be interested in, click the link in the description. You can join our free community, visit our website, apply for one of our upcoming Web3 and AI cohorts. We break down every ecosystem inside of crypto. We have a few more scholarships to give out for our upcoming cohort, thanks to our sponsors. And if you want to book a call to see if the program is a good fit for you, you can do that too. But with that, thank you guys so much for watching. Love every single one of you who tuned in, and we will see you guys in the next video. Take care and trade safe.